Hello everyone, I'm Dr. Stock, and in this video I'm doing a follow-up to earnings for AMD, Starbucks, and then also doing a little bit of an update on Apple, which we have coming up on the 4th. In the after hours, we have Apple's earnings. So in this video, I'm going to talk to you about each of those and what we saw from them. Now, here's an offer from Moomoo down in the description. It's the trading app that you'll see in my videos today, and this is the best, by far the best offer that they've had out so far. You can get up to 20 free stocks by signing up and making your deposit, and each of those stocks is worth up to $2,000. So take advantage of that offer. And then also, while you're looking down in the description, find that link for the Patreon. Click sign up and check out my Patreon exclusives to be part of the private Discord community and chat with me and the other community members. So with that said, let's move right on into earnings. So let me bring that down, pop that back up. There we go. Click, clack. There's AMD. AMD revenue drops 9% as PC chip sales decline sharply. So AMD, I was wrong on this one. This one I thought they had a chance to come out and beat on earnings and surprise us. And well, I guess PC chip sales had another idea in mind, and it could indicate that what we have is the consumer foregoing this upgrade cycle and then eyes on the next one. So we'll see that, and it is possible that AMD turns that ship around. It just might not happen throughout 2023. They have offered fairly weak guidance in that moving forward, that forward look. So we'll see what that looks like on the charts. Starbucks, however, this one, so I'm 1 for 2 right now. Apple's going to be that tiebreaker in the after hours on Thursday to see how we do. So for Starbucks, I said that they were very much near the top. Is this the environment to see that all-time high come in? And the answer to that one was no. So even though they had a great quarter, it's still the guidance that they gave doesn't look too great for 2023 for them. And not horrible, just not great enough to keep them rising up to new all-time highs or going back to matching those all-time highs. And like I said, we'll see that as well. So let's transition from there over to the charts. We'll see what that looks like. Boom, there we go. So there we got Moomoo up, and right now we're looking at AMD. So this is the daily chart, and you can see the bullish channel that we had going for them, and they were sitting right on the 200-day. Well, if we go intraday and we look at the pre-market hours, you can see right now that they're down, rocking around 8%, just under 8% away from yesterday's close. So not great for their earnings for watching that one. So that one being around $83 per share puts us right around at the bottom of these candles that we have here. It is possible that we come down, maybe we test that 200-day. We're going to have to see with that whole debt ceiling crisis coming on, what sort of downward pressure we get, if it's going to be just these small little shaking things. We'll also have to hear from Jerome Powell today at 2 p.m. or 2:30 p.m. I'm going to have to look into that. So let's move on from there over to Starbucks. There we go. My question on Starbucks was, well, hey, do they have the strength to make it out through here? And you can see they actually had some downward pressure, and they did all right. They actually had the Bears win for a little bit in the market, and then the Bulls pushed it back up to about 114. And then in the pre-market hours, we're actually looking at about, I think, 108 last I looked. Yeah, 108, and they're about 5% down, and that's on that weak guidance that we got from Apple. So that's also noteworthy to look at. So 108 actually brings us all the way down to about where the top of this peak is here, and then the bottom of that one's around 106. So we're actually sitting right around in this area right here. So for Starbucks, if we zoom out a little bit, you can actually see that 108, 110, it might actually recover a little bit and maybe hold steady right at about this level. Seemed to be a decent area of resistance, and now could honestly be a decent area of support for us in the near term. So Apple's that last one, and like I said, their earnings are coming out on May the 4th in the aftermarket hours. So I drew this line on here. So this is the downward trend, the long time downward trend that they've been on since going all the way back to January of 2022 and coming off of those peaks. And you can see they just ripped downward over time as we had all the economic uncertainty, and moving in from there. They actually had this red candle day yesterday and actually came down and just gave a little bit of a little tiny smooch right to support right off that downtrend. So we'll see where they are sitting. So let's look intraday real quick. They're actually up about 1/3%, and that actually kind of goes along with what we saw with what we're seeing in the pre-market hours, with the markets all being up a little bit. So we see a little bit of that movement, and it is possible that we see a slight recovery going into their earnings through Thursday. But like I said, we're going to have to see what the overall market does. Apple is going to be one of those big heavyweights that we have in the S&P and in the NASDAQ. So its own price performance is going to have influence over what the indices do. So that's something that we're going to have to keep in mind, being such a large company as they are. I think around a $2.6 trillion in market cap at their current price. They're crushing it right now. They're killing it. As a matter of fact, in this app, if you go to quotes, and right now I'm in my watch list, go to quotes, and then we can see market cap in here. There it is, $2.67 trillion right now as of the time of this recording. So that's Apple, and there's one other thing that I wanted to show you. So let me pop this up, and this is still Moomoo. This is just their mobile app, and this is their earnings calendar. And the way that you get here is across the bottom. You go to Markets on this bottom tab. So hopefully you can see my cursor there. So in that bottom tab for Markets, all you got to do is tap on Earnings Reports, and it brings up this menu. And if you scroll down to the fourth, you'll see Apple on there right about the middle of the screen. I'll put my cursor on that for you as well. There we are. So tap on Apple, and it's already added to my calendar. And if you scroll across the top over to Financial, you actually get to see their previous performance. So quarter one fiscal year 2023, that was Q4 2022 is when that happened. Fiscal years don't always match up. So this is actually quarter two according to their fiscal calendar. So that's something that we want to pay attention to for that. And you can see iPhone sales being over half of their revenue is iPhone sales, and then they give you a further breakdown. So that's actually pretty cool when you look at that. So if we go down to the estimates part of this, you can actually see that they're expected to come in with an EPS of $1.43 per share. And then revenue that we have on that, $92.84, so $92.84. And then they also have EBITDA on that. Now, you might also notice in the middle of your screen on here that it is a bit of a downtrend off that previous peak, and that is because of the seasonality of Apple earnings because of the holiday season. So that's something that's not too concerning for that. And then if you actually scroll down and look at some of the other numbers and a lot of the negative percentages that they have that pop up here and there, we have to remember what kind of year 2022 was with high inflation, and we didn't know if inflation expectations were going to be unanchored. And, well, that actually caused a lot of trouble. So we didn't know if we were going to have a huge spike coming in from the Fed from that or not. And as inflation fear subsided, and as we started to feel more comfortable that the Fed was going to be easier with its rate hikes rather than a big old rug pull and really skyrocketing the federal funds rate, then as that confidence came back, we didn't necessarily have that same fear. And that led to what we saw in January with that big run, especially in tech and in big tech. And a lot of the growth companies that we like that have pushed down for so long actually got to experience some relief during that time. So remember, check out that link in the description for Moomoo. Take advantage of the best offer they have to date. It is available through my link down in the description. Also, don't forget about that Patreon link that's down there as well if you want to support this channel in that way and get access to my Patreon exclusive content and be part of my private Discord community. We'd absolutely love to have you over there. Hit the like button if you like this video. Hit the subscribe button to subscribe to my channel and ring that notification bell to see anytime that my videos come out. I am Dr. Stock, Doctor of Education. We'll see you in the next video.